I promised that I will be in Bahrain on the 24th of May, Friday. The location has been fixed. It's Hotel Rami Grand, opposite to Seif Mall. Those desirous of meeting me in Bahrain can contact my team at the WhatsApp number given below or drop an email at the email address given below. See you in Bahrain on the 24th of May.
Hi everyone, welcome back to Be Rich. I hope you have a wonderful Sunday and hope you recovered well from your revelries of Saturday. That being said, Anand has been doing some videos about this. I've also spoken about it. Then we spoke about it together in MoneyPechu about the weakening yen and the implications of that, and Bank of Japan intervening, trying to support the currency. There's an interesting article I read about the former Treasury Secretary Larry Summers, or Lawrence Summers as he's formerly known, and this is an interesting article which kind of highlights from his vantage point, because he's done this work and he's had experience in this. Though his people have who like him and don't like him are in two camps. I understand the reasons behind it, but still, respecting the man and his knowledge and his experience, I thought it's something interesting, and I could offer this what I read in the article, adding my also views to it, and maybe it can be some food for thought. And I'll tell you why, as an investor, this is very interesting and something you should keep an eye on and think about by the end of it. So he expressed skepticism basically about the effectiveness of currency intervention in shifting exchange rates. He highlights that substantial intervention, like those assumed to be done by Japan, because Japan hasn't come out and said we did this, and are technically ineffective because of the enormous scale of global capital markets. So instead of thinking about it like, a speeding asteroid moving and you deflect it and it takes another trajectory and goes like that, that is what most people assume it to be. I would say it's more akin to a train or a car hurtling down as a steep angle and the brakes have failed and you're using the hand brakes trying to stop it. No matter what brakes you're putting, the sheer size of the weight of the vehicle and the steep incline it's at, and the brakes have failed, it'll be very difficult trying to stop the car by using any form of small friction you may be able to induce by against it on the ground. So it's like that, trying to stop, you will burn your handbrakes, you'll not be able to stop this because it is going at such a high velocity. Or at most, what you'll be able to do is slow it down slightly, where you can maybe jump out of the car. But that car or that train is moving at such terminal velocity, it'll be impossible to stop it. That is the kind of analogy he's talking about. Because in specific reference now, let's talk about what happened in Japan. He said Japan might have engaged in large-scale intervention. He's saying the potential, because they see this kind of intervention happen and the reflection based on how the currency moved, he's saying it was potentially spent around 9 trillion yen, which is approximately $60 billion, in the recent effort to stabilize the currency. But despite these efforts, he says in the long term, the effectiveness of altering exchange rates won't be much. And he explains this very well why. So he says yen has been experiencing the best week it's had against the dollar in 2022 after the intervention, right? But however, he points that the currency levels often deviate significantly from normal levels, leading to an intervention. So he says, because of these deviations, people try and intervene. And he says any appreciation of the yen, which you're seeing, he says could be a natural rebound, which has been happening because of what's happening with the currency over a long period of time. If we study the graph, he says it just could be a bounce, a snapback that's happened rather than a direct result of the intervention. And the reason why he can say all this is he's got a lot of historical context. When he had the tenure of US Treasury Secretary from the late 1990s to the early 2000s, he oversaw several notable currency interventions, and especially in relation to the euro and how to defend the euro. These interventions were primarily motivated by the concerns over the stability of the global financial system and aimed to stabilize and support various currencies during that period to prevent economic distress. And the famous one was the G7 intervention to support the euro in 2000. What happened in 2000 September was the fears that the continuing decline of the euro might trigger a global financial crisis at that point of time prompted the G7 nations, including US represented by him, to intervene in the currency market. And this coordinated action by the central banks of US, Canada, Britain, European Central Bank was aiming to bolster the euro, which was facing significant downturn pressure. Approximately $7 billion was mobilized back then to lift the euro temporarily before it fell back slightly. Despite the immediate effects, Summers went on to say, is emphasizing the importance of strong dollar for the US, indicating the complex balance between international partners and maintaining the national economic policies. So it was mainly because of the strong dollar which was there. And he says during his experience with currency intervention during his tenure, he underscored they typically have limited impact on long-term currency values. He says these interventions to stabilize only provide short-term benefits. Nothing can help you in the long term. And the reason why he says is currently, right now, what is happening to the Japanese yen is because of the impact of a strong dollar on the US inflation. He said there's a strong position of the US dollar. He's saying is noting that the strengthening imparts this inflationary bias to the US economy. What this means is because the US dollar is very strong, that means it gets cheaper for Americans to import things into the United States. That coupled with already inflation in the US, things coming into the US will become cheaper, spiraling more inflation. And he said, he cautioned this, saying that relying on this can complicate issues for the Federal Reserve, which is trying to achieve inflation at 2%. To keep inflation at 2%, a strong dollar is not an ally for the Fed. Because what happens is things coming into the US get cheaper, bringing more goods into the US, driving up local domestic inflation further. So he's criticized, the Fed, saying that keeping these interest levels at 5.25 and 5.5 to curb inflation, saying that it's underestimating. The Fed is underestimating the tightness of its policy stance and its data. He's saying, if you look at the recent data which is coming, which is labor cost and the modest wage growth which is happening, he's saying this is not going to be cooling inflation. If anything, it's going to keep inflation stubborn. That, he says, is going to force the Fed that it will not be in a position to do any kind of rate cut, even little rate cut, in any time in the near future. That these rates are going to be maintained for a very prolonged time. And the strong dollar is not aiding. And this strong dollar is what is creating problems for Japan. And whatever the Japanese bank has done, it's very short term the effects will be. And the yen will continue to struggle against the dollar, which has already been doing. So he says Japanese bank is better off trying to do something else than trying to intervene and support this currency, because the other side of the balance is what he's saying. The other side of the equation, Japan has no control over. And even if they rely on the US being their partner and their trading partner and global partner and saying, hey, can you do something for us? The Fed is in a position where it cannot do anything, is also he's further saying, because the Fed's own problem is complicated even further with the strong dollar and already inflation which is not under control. So if you look at the whole dynamics of it and the size of the global capital market and the currency market, what Larry Summers is saying is this is not going to be something, you can't control this. Whatever you try to do, he said, from his own past experiences of trying to do this, he says it's very difficult to control these kind of currency markets because they have a natural ebb and flow. And till the Fed interest rates start moving the other direction, it is very difficult for the Japanese yen in the foreseeable future. So what does this mean as an investor? Well, as an investor, it gives you cues. In the short term to the near future, looking at the Japanese company and the Japanese economy and the market, companies in Japan which rely on income from outside Japan will be faring far better than companies which rely on domestic market. And tourism in Japan will prosper because tourism will be able to come to Japan because the yen is so cheap. That will bolster companies and economies tied to tourism. So this is what you should keep in mind as you think of Japan and you think about investing in Japan. I hope this gave you some food for thought on this Sunday, and I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.